Good morning, everyone. We're kind of freestyling here, so perhaps I'll start with an introduction myself, and then we can do some intros and then get into the conversation. So my name is Matt Twomey. I'm the co-founder of Sustainable Bitcoin Protocol. We are a protocol that verifies and financially incentivizes more Bitcoin miners to choose clean energy. We've created a solution that institutional investors can now own verifiably sustainable Bitcoin and add it to their balance sheet. Maybe I'll hand over to Pierre.
Thanks, Matt. Good morning, everybody. So my name is Pierre Noizat. I'm the founder of Pemium, Bitcoin exchange that started in 2011. That makes it one of the longest standing Bitcoin exchanges in the world. And I'm also a teacher to students in Paris La Défense University, teaching a Bitcoin course.
Good morning, everybody. Nazar Khan from TeraWulf, a co-founder and CEO of the company. We are a zero-carbon energy miner. We've got two sites. One is close to a hydro facility in upstate New York, and the second is adjacent to a nuclear facility in Pennsylvania.
So perhaps let's start with ESG and maybe a little bit of background on ESG. It's obviously a fairly clunky acronym that we all are very familiar with, but the origins have been around for over 50, 100 years. It probably came into more awareness with social investing from an investment standpoint. The 1980s with South African apartheid. You saw some of the mining spills throughout the 80s and 90s really defined more about what ESG was going to become. And essentially, it's just information. It's data being collected from companies, and that data then is built into investment analysis, ESG risk profiles, and obviously it's morphed over time now where it's become very much a contentious topic. Probably from a geographical standpoint, it's better understood in some different regions. For example, Europe really has been like the heartland of ESG. The origins for ESG investing especially has grown substantially here. In the US, though, obviously, especially over the last 12 months, it's become very contentious, and we can explore that a little bit today. But that's kind of the origin, maybe from an impersonal standpoint. Maybe each of us can share a little bit about where they see ESG right now, and if they believe it's still prevalent in their business.
I don't think it's so much impacting us yet. I think it's a label that's been created by big consulting firms for big corporations. And as such, it's not touching us yet. But it could become a problem if investors really adhere to their criteria, because they could easily hijack the conversation about the environment, for instance, as they do today. So when teaching about Bitcoin, I start by teaching about energy in general, because it's money is information, and information is a representation of energy. We accept money as compensation for our work, and our work is human energy. So this equivalence is very important to understand. Information is a reduction in entropy, so it's measurable. It's very abstract too, so it's a difficult undertaking to teach about these abstract concepts. And that's what I try to do. So when talking about energy, I start also talking about production of energy. How does it work? Because some people will deny that energy surpluses even exist. They are so out of touch with the reality of electricity production that they will deny that there exists a ton of energy surpluses to be monetized around the world by Bitcoin, precisely. And that's the beauty and the virtue of the protocol, of the Bitcoin proof-of-work protocol, because it's acting positively for the environment in three ways. First, in monetizing energy surpluses. So I have this example of a dam in rather a run-over-the-river electricity production facility in Congo, for instance, that was financed because miners went in and built the facility. And this facility is powering nearby Goma, 1 million people city nearby the run-of-the-river production facility. And only because of the Bitcoin miners, this was financed. Traditional finance could not, finance the facility because, international aid comes in fiat money, and fiat money is, again, running through the corrupt local banking system. So there is no way that traditional financing would have made this possible. So that's one example of the useful impact of Bitcoin on the environment. It's also the S in social impact, because it's also employing local youngsters, that work on the mining farm, and then also spreading the skills, so that could be useful for other developments, local developments. Vented methane mitigation is also a positive environment impact for Bitcoin mining, and also grid balancing. So there are at least 3 ways in which Bitcoin mining is acting positively for the environment.
Thank you. And just, the topic is ESG a thing? And I think, clearly ESG is a thing. And it's become a thing, I think, that wasn't intended, right? It was intended to be a framework for people to think about how do we invest, how do we allocate capital, how do we act and behave. And I think it's become more of a political issue now, right? It's kind of become a wedge. I mean, there's recently an election earlier this week in Germany, state elections where, a right party kind of platformed on an anti-ESG kind of platform. They're saying we're against ESG. And so really, what does that mean? And, we often get the question, we are a zero carbon energy Bitcoin miner, and I often get the question, if ESG wasn't a thing, would you change where you're getting your energy from? And my response is no. And the reason for that is if you look at just kind of the economics of how the power grid is changing, and how you procure your power, being able to procure resources that have effectively come from a low or zero marginal cost product, for Bitcoin miners particularly, who care quite a bit about what their per unit cost is very interesting, right? So there's a lot of times in the day where, again, if you have a product that has a zero marginal production cost, that it has a fairly low price on the market, and when the prices on the market are high, driven by the inputs of thermal generation, whether it's coal or gas, that often drives the price up. That's when we're not there. So a lot of times my response to that question from an energy perspective is we wouldn't really change our behavior if GSP was not a thing, because I still think the way to the lowest cost is kind of how we look at it. And I think particularly on the environmental front, that's often missed. People, again, I think it's become more political, so it's kind of, are you for it or are you against it? But people really don't talk about how the market's evolving and what does that mean for kind of cost. And they focus on, I think, more of, hey, we're getting rid of sunk costs and assets that are there today and spending a lot of money on new assets, which is true. But I think when you start to kind of look at it over a levelized period, over kind of the life of the asset, you continue to run, a coal plant today for 20 years versus invest today and run something else for 20 years, you come to an answer, I think, that is more nuanced than just, it's raising costs. And so that's where I think from an energy perspective, again, because it's become a political label, you really can't get into the nuances of it. From a social perspective, I think that's probably the second. Energy, to me, the environment's kind of the most kind of political, right? Then the social aspect, I think, is the second most political. And so in this environment, there's been a number of events pushing things back and forth. And so again, as a guide of how one should kind of act, and for public companies, who's on your board, how you're represented, those, I think, again, are tools that, again, absent kind of any kind of politicalization of the concept, most people would probably agree with kind of how that approaches it. So I think the challenge that we have, and from my perspective, especially within the Bitcoin mining space, no one's really getting credit for ESG. I mean, that's not a thing that people don't really value a company based upon that. They look at their economics, they look at their balance sheet, they look at how much cash flow they're generating. And so ESG is not really a factor in how that's evaluated. But again, I think as we think about this, it is a framework. And again, the intent of the framework is to drive kind of a better outcome, again, from both a financial perspective, but also kind of from a social perspective. And I think that's been lost. And that's where, whether it's a rebranding or a refocus on kind of the intent needs to come about.
Yeah, just tying on to that, I feel like we're very much advocates of incentivizing more and more miners to choose clean energy, but the work that's being done by most of the mining industry now is probably having received its just rewards at the moment, and I think that is probably a situation which we believe is going to change. The fact is that from a capital allocation, the ESG money that stands is an enormous figure. It's something like 35 trillion of capital that is governed under these mandates and need to make investment decisions under these mandates. And most of that capital probably hasn't been or thinking about allocating into Bitcoin mining space or into Bitcoin. But I think the evolution that we're seeing with miners like TeraWulf and CleanSpark and a number of other prominent clean energy miners is that that narrative is changing dramatically, and it's changing quite quickly. And the way that changes is obviously through more and more data and more transparency. And we're big advocates of that in terms of helping change the narrative overall. And then starting to influence some of the more traditional ESG indexes and ESG rating indices so that they can start to consider the mining space and Bitcoin as part of their ESG framework, because the points that Pierre mentioned and Nazar mentioned, we believe that Bitcoin can actually be very much a powerful ESG asset and a powerful for good across the three metrics, environmental, social, and governance. And it's probably a bit misunderstood at the moment in a very complicated matter. But in that sense, Bitcoin, because of its nature, just being energy and code, the narrative can change very quickly.
Yeah, one of my concerns with the E in ESG is the fact that it could be used to mislead people into thinking that proof of stake, for instance, is better than proof of work as a protocol. I think that would be a lie, because first of all, proof of stake is comparable to proof of work, except the energy level is set to 0. So essentially, you replace this representation of energy that is Bitcoin with the trust in the stakers, and that's very much similar to what's happened in the art world. And I'm not the only one making this comparison between, say, Rembrandt and because we are here in Amsterdam, Rembrandt and say Jackson Pollock, an abstract artist from the 50s, the one that started this thing about what I call proof of stake art, what people call contemporary art. So now in the art market, the stakers are the galleries and a few artists that sort of manage their signature. They put their signature on something that's really not on par with what the previous masters from past centuries did, because the previous masters did what we see here are proof of works. That's proof of work. And when I see a Jackson Pollock painting, the most important thing on the painting in the signature, exactly like proof of stake. The signature is the only thing that makes it valuable. And strangely, now it's almost as valuable as a Rembrandt painting. It's talking about Jackson Pollock. So that's the kind of craziness into which we are engaged with proof of work and some ESG supporters, I would say.
Yeah, that's a good example. And so the other thing that that comes up is for a while there was effectively kind of a premium embedded in saying, hey, we're going to go after ESG, and there's been a big debate. Was that premium there just because it was a forced allocation? There's an allocation, and so you're investing in the ESGs, therefore there's a premium there. Or was there a premium there because in the long run, when you factor in all the environmental, social changes, those that are investing based upon that framework are going to be better off in the long run, and therefore there's a premium there for that. And that's been a debate that's been kind of since the start of kind of the introduction of these ESG types of funds. And again, within that debate, we kind of get to the heart of this question: what is ESG? And again, the more and more we, especially in the Bitcoin world, can articulate that it's not because of this forced mechanic that you have to invest in ESG, therefore there's a limited set of investments and that's what's driving the premium. But that premium is there because in the long run it will be a better outcome. And as kind of both Pierre had mentioned, Matt mentioned, all of kind of the components that really drive that framework with respect to ESG and what kind of those long-term benefits are prevalent within the Bitcoin ecosystem. And so again, the more we can underline and speak to those benefits, again, whether it's from an environmental perspective, a governance perspective, I mean, to Pierre's point, right, I mean, energy is in some effect a more just form of governance, right? I mean, energy is available in every corner of the earth. Everyone's got a different access to it, but pick any country, pick any people, they have access to energy in some way, shape, or form. Therefore, in my mind, that is in some ways a more just form of governance versus kind of an institution made by people that has a set of rules that could be changed, modified over time. And so those are the things I think as we think about ESG, and we need to highlight that, again, it's not that it's a forced mechanic that's driving, investment or a premium, but it is the underlying value within it, which over the long run will create, incremental value.
Yeah, I think that's a valid point. I think there's a lot of alpha that can be generated in non-investment decisions as opposed to purely investment decisions, which kind of the ESG bracket sits under. And I think as the industry becomes more institutionalized, you're seeing the ETF applications flooding the media and will soon be approved. That's going to come with a different set of investor that wants to invest in Bitcoin because now they have the products to be able to express that investment idea. And that also means that it does potentially unlock some of the ESG considerations and capital that we've spoken about. So I think that is going to be an evolution that happens near term. You're going to see more and more institutions who want to get exposure to this asset class, understand that they need to invest it through their own framework, and that framework can well include ESG.
Yeah, to your point about the G in ESG governance, I think you noticed how much central bankers put an emphasis on trust. They are trusted institutions. I think there is absolutely zero trust in central banks today. It's only forced trust. In other words, we are forced to use their money because it's a monopoly, just as simple as that. There is absolutely no need for trust when there is a monopoly. It's just a monopoly that's enforced by the power of law through regulatory capture. But there is absolutely zero trust in the fiat system today. But it's interesting to see these people emphasize trust as their motto. Whereas in Bitcoin, it's a trust minimizing system. So we don't talk about trust too much. We do need trust, if only trust in math, that is trust in previous mathematicians that did all the hard work to prove that the hashes cannot be reversed or that the digital signature cannot be faked. That's the hard work of previous mathematicians that we trust. I trust. I've learned a bit about math and I trust them. I haven't done all the work they have done, but so there is some trust, but it's minimized in Bitcoin. Whereas in the fiat system, there is absolutely zero trust, only monopolies. So I think our main focus should be on criticizing the monopoly instead of promoting cryptocurrencies. I only promote cryptocurrencies as a way to end the monopoly. That's really about free speech also. The ability to use your own money is basic right that should be given to everyone on this planet. So that's really about free speech. So whenever people raises the G in governance, I would start by questioning the monopoly of fiat money.
It's interesting. I think Bitcoin is one of those unique things that we have people that dislike it across the board, left, right, center. You can find people that have some gripe or complaint about a Bitcoin, and so to me that's somewhat interesting, right? Because usually you have kind of a perspective that says, we like this and we don't like that, or they like this and they don't like that. But we can find people across the board who have components of Bitcoin that they don't like, and for the far left, any kind of Bitcoin mining to them is a waste. Any use of energy to mine Bitcoin is excessive use of energy because it shouldn't happen anyways, right? And so to Pierre's point, when we think about the liberal values that often drive the left with respect to kind of free speech and lack of censorship and the ability to kind of voice your opinion, I mean those two points are in some sense kind of against one another. Where again, on one side they're saying, hey, we're using this energy as a form of kind of of freedom of speech, and for them again that use of energy is a waste. Likewise, you have kind of folks, that may be conservative and say, hey, this is a new system that doesn't work. We have a system that works perfectly fine. We don't need this new form of a register that's like kind of out there to kind of keep track of things. We've got something that works perfectly well. Look at how well we've been doing for the last 100 years or 200 years. And that's where I think it also becomes interesting is because they're referencing the last 100 or 200 years. And if you really think about the economic system that exists today, it's really from Bretton Woods and kind of 73, right? So we're actually in a relatively short period of time when we consider kind of the history of all of humanity with respect to how the system works. And so as we think about these concepts, I think it's important to kind of drive down and make sure that we are highlighting what each one of those specific words was intended to mean and how that framework kind of ties back to where we're at. And that's where I think, again, to me, it's been this fascinating journey that, I've been a kind of Bitcoin since 2017, 2018. It's been this fascinating journey where, again, I'll get kind of, complaints or gripes from all walks of life. And again, to me, that means, we're probably onto something.
Yeah, perhaps I can just share a little bit of color in terms of maybe the regulatory picture when it comes to ESG as well. Obviously, sitting here in Amsterdam, we're very mindful of the European Union, European Commission, and some of the ESG framework that they've implemented here since 2021. There's a thing called SFDR, just to add another acronym in there, called Sustainable Finance Disclosure Regulation, which has different articles of different sort of ESG compliance. The reason I mention that is these different jurisdictions and articles unlock enormous amount of capital that if we can get to a place in a future state where the ESG strength and the ESG benefits that are being complied by Bitcoin miners and by the industry, then the Article 8 and Article 9 can be opened up for the industry and potentially be a massive unlock of future kind of liquidity into the sector and into Bitcoin, which I think is super interesting to consider. And then finally, you've probably got on the other side, you have in the US where potentially you might see the SEC coming in with climate crisis regulation and disclosure regarding ESG, which all companies within there will be needing to meet, which again will be putting heightened focus on the ESG data and transparency that the miners that we work with and the miners in general can showcase their good behavior.
I guess we need to wrap up. So I would just say, returning to the E letter, I invested a little bit in a mining operation in Paraguay recently, and I learned an interesting situation there. They're operating a private operation, and that's marginally profitable because of the bear market and all that. But they are competing against illegal mining also, so people basically drawing electricity from the lines to mine illegally, and also competing against the local government that's also mining on its side. So it's interesting to see that mining is indeed can be an interesting opportunity for developing countries, but it will unfold in somewhat unpredictable ways, perhaps. But that's certainly the way to go to monetize energy surpluses in countries like Paraguay that have tons of energy surpluses, hydroelectricity in particular. So again, it's fascinating stuff, and that's really a vindication of Satoshi's protocol and using proof of work in the Bitcoin protocol.
So maybe to wrap it up, will we be talking about ESG now, in Amsterdam next year?
Yeah, for me, I think it's sadly going to be something which is always going to be a topic of consideration. I do feel like it's an acronym and an area that probably needs a bit of a rebranding. Certainly, some of the data that historically has been less effective. So I do think as a framework, it needs to continue to innovate and improve. Essentially, though, I think that when you think about the benefits of Bitcoin and Bitcoin mining, that it firmly fits within that ESG category and actually can be a real opportunity of embracing it and leaning in.
All right. Well, we'll hold you to that, Matt. So we'll see you next year and see if that's still a topic. Again, thank you all for the time this morning.
Thank you, Miami, for the last 3 years in this amazing city. The whole world shut down, but Miami welcomed us with open arms. We want to show Bitcoin to the whole world. We are taking the conference on the road to set the stage for Bitcoin in a new city. Nashville. Bitcoin 2024 is coming to Nashville in Tennessee, a city that is known as a music and freedom city. Bitcoin 2024 in Nashville from July 25th to 27th.